Good afternoon, everyone, and welcome to the Monday Open. My name is Mark. I'm from the private client group here at Vantage Markets Australia. I'm based in Melbourne. We usually have my colleague up there in Sydney. We usually present together, but he's actually away today. He's here sick for the day, so I'll be presenting this one solo. We'll be covering the usual what's happened last week in the markets, what's upcoming this week, a bit of technical analysis and some Q&A at the end. We'll start off with what's happened last week in the markets and recap on the important events that have just come through last week. So the first one is the CPI data out of the US. It came in exactly as expected. It didn't have much of an impact on the US dollar as the markets were predicting 0.3%. So it came out as expected at 0.3%. So the overarching theme for the US dollar at the moment is the interest rates, and the Fed still deciding on how fast they're going to cut interest rates. We did have a Federal Jerome Powell comment last week. Actually, he actually said no need to be in a hurry to lower rates. So that kind of spooked the markets a little bit. So that's sort of indicating that interest rates may be staying higher for longer, potentially even increasing depending on what inflation does. We also had the Australian employment data out last week. That was weaker than expected. The Australian dollar didn't really react much to that one there. Again, the overarching theme is the US dollar. So we also had US retail sales come out as well. They were better than expected. So what's upcoming this week? We have the UK CPI data coming out. So that's actually expected to tick up to 2.3%. So the previous one was 1.7. So the forecast is actually 2.3%. So which is sort of unusual because they're expected to actually cut rates more aggressively if inflation starts to tick down more aggressively. So the CPI data is generally a measure of inflation. So it is actually expected to tick up to 2.3%, which indicates that inflation it may be on the rise. Which may mean that they may need to sort of slow down the pace of cutting rates or even potentially hold for a long while. There was an article I read on Reuters actually as well, which said that the central bank in the UK will cut more aggressively if inflation does go down. But in this case, it's expected to tick up to 2.3%. So it'll be very interesting what happens after that. We also have US initial claims, unemployment claims out of the US on Thursday. That's expected to tick up slightly, but it's not going to have much of an effect on the US dollar. The primary theme at the moment is interest rates, how much the Fed is going to cut, whether they're going to leave them on hold, if they're going to increase rates at all. So that's sort of like the markets are still sort of deciding on what the Fed's going to do. We also have a crypto convention on Saturday and Sunday. Myself and Jeff will be attending that one on the weekend. We're going to have a lot of brokers there. So feel free to come in and say hello if anyone does attend. Me and Jeff will be there. So a bit about technical analysis. I'll just quickly share my screen. Sorry guys, I think I'm having a bit of technical issues here. Just give me a second. Here we go. All right, that should work now. So I have here Bitcoin, which has been very popular ever since the US elections. We did have this spike up here. That's primarily because of the regulations around crypto. The regulations aren't as restrictive. So that's why we had a positive reaction in Bitcoin. So this is BTC against the USD. We did break a level here at 75,000. we are sort of hovering around this level here. It can potentially pull back in this area and then sort of take off from there. But it is looking quite aggressive at the moment, so it might not even pull back or just maybe keep shooting straight up. But we're in sort of uncharted territory here. I mean, we did break all-time highs, so a lot of people are predicting 100,000, but yeah, you never know with this thing, so we'll see what happens. We do also have USD CAD as well. So with the USD CAD, we did break an important resistance level here. You'll see it more clearly on a weekly chart. So again, we're trading in this range for quite a few months here at 1.3977, 1.3839. We did break out of that, a nice clean close there. We might even come back here, retest this area before deciding to take off again. The reason why this pair is looking strong at the moment is because the Bank of Canada are cutting rates more aggressively than the Federal Reserve at the moment. So a big so with currency pairs, so the main thing that sort of moves currency pairs is interest rate discrepancies. So because at the moment the Canadian dollar interest rate is lower than the US interest rate, you're sort of seeing the US CAD increase in value. So that's the reason why this is actually broken out. But if you look at the 4-hour chart, you'll sort of see a clearer picture of the breakout there. Again, it might even pull back into this region here. We've got the EMA here as well. So yeah, some potential buying opportunities if it does pull back into this area. We'll also take a look at the S&P 500 very quickly. This is very interesting because it's been going up ever since Trump was elected as president here. So we did have a massive rally up. We did have a bit of a pullback on Friday on the back of Jerome Powell's comments saying that interest rates may stay higher for longer. That generally does have an impact on stocks. High interest rates generally does have a negative impact on stocks. So that's why you saw here a bit of a pullback. Not sure if this retracement will sort of keep going. They might even find a bit of support here. We can actually draw a Fibonacci retracement from this lower low here to the high there. We did pull back into that 50% level here. Again, you have a bit of a structure on the left-hand side here. So we might even sort of see a push up from this area. If let's just say you did have, for example, buy positions here, there is a nice 2-to-1 risk reward on this trade here. So yeah, I mean, depending if you want to, it could even sort of come down here and then go up from here. But we are seeing a bit of support level at the moment. That's about it for technicals. We'll quickly cover the question and answers now. I'll just stop sharing my screen. Okay, so the first question was from a client of mine. How do yield impact on the currency? So yields are pretty much interest rates. So the higher the yield, the stronger the currency is, because what happens when you get high interest rates, foreign investment comes in, they invest in that currency, and then that naturally just increases the value of that currency. So that's pretty much how yields impact the currency. Lower yields will mean less demand for that currency, so the value will go down. And question 2 is quite similar. How does the yield curve affect central bank moves? So with the yield curves, you have sort of 3 types of yield curve. You have a positive sloping yield curve, which indicates interest rates on the rise. You have a flat yield curve, which indicates interest rates are sort of flat, nothing is happening, and then you get an inverted yield curve, which indicates interest rates are decreasing. So typically what happens is when you have an inverse yield curve, which means that the 2-year yield is actually higher than the 10-year yield, you typically that's an indication of a recession, generally speaking. So don't want to see that. But in a natural sort of normal economy, you could say we do have just a nice sloping upward yield curve. that's about it for the questions here. We'll quickly just wrap it up here. So yeah, so for more content, you can jump on in the VIP trading room. It is staffed by our by myself and Jeff. We are on there all day. So if you have any questions about the markets, then yeah, just feel free to jump on there and ask. It is also staffed by the Everest Fortune Group. We do also have weekly technical videos, which is every Monday for a more in-depth analysis of technical analysis. We also have the private client daily update, which is written by myself and Jeff. That basically recaps what's happening, what's actually happening in the markets on a daily basis. Myself and Jeff, we write that every single day. So yeah, just feel free to subscribe to that one if you want to receive that one. And that's pretty much all for today. Wrap it up, and we'll see you all next week.